Good day, fellow investors. So recently JD announced offering convertible bonds, and I also got an email from Valerio asking on my research platform, why are they doing that? Even Alibaba now announcing, or rumor from Bloomberg that they are doing so. Why on earth would they want to do that with all the cash they are supposedly have sitting in their accounts? It seemed to make their balance sheet looks questionable now. And I really want to discuss this because this is from Bloomberg, considering convertible bond sale the same as JD did, and then they say the stocks because of that crashed 6.6%. And this is something that I want to discuss also to show news and then reality, because we'll explain convertible bonds is something a company like Tesla did constantly in the 2010s to get money to grow, and now JD and Alibaba are doing the same to take advantage of some market situations, and that's what we are going to explain. Let's take JD as an example, and they have upsized offering 1.75 billion of convertible senior notes. Convertible notes are notes that are issued, and if the stock price is higher than the conversion price at the expiration date, in this case in 2029, then the owner of the bond will convert into stocks and sell those stocks at a higher stock price depending on the stock price in 2029. If the stock price is lower than the conversion price, then the owner of the bonds will simply get his money back. The thing is that the interest rate is ridiculous because people are happy. Okay, if the stock price doesn't go higher, I will get my money back. Thus, practically, apart from inflation, you have no risk and opportunity cost, of course. But if the stock price goes above the conversion price, that is 35% above the current level, or 132 per Hong Kong stocks in case of JD, then all the upside there is for you. So the conversion price is 45.70, the current stock price is 35, and then if the stock price of JD is higher than 45 in 2029, you convert your stocks and you get more. So you have all the upside like an option from $45 above, but you get nothing for your money for 5 years. That is the game. If JD stock goes higher than 45, you make your money, and even the value of your bond is worth much more, even just if the stock goes higher. If not, you will get your money back and practically have a safe play. Same thing was Tesla doing, offering convertible notes at a much higher conversion price, and even Baupost hedge fund added 250 million, I think, of Tesla convertibles. If the stock price goes higher, you make a lot of money. If not, you just get your money back. Plus, back then with Tesla, there was a coupon code of 2.375, as there was also the chance of Tesla going bankrupt, which is when you get nothing from it. So these are the convertible bonds, and let's now just explain what is JD's interest here. So they issue now, what was it, 1.7 billion of convertible bonds, and they use that money to do buybacks. And they buy back, I think their market cap is 50 billion, they buy back 3% of the company. If in the future, in 5 years, 2029, the stock price is higher, the stock price now is 33, if in 2029 the stock price is 45 or higher, they will issue these shares at a higher price. So the spread there, you buy at 33, you issue at 45, and this is a net gain for the company, about 33%. So it is financial engineering of some kind. If the stock price is below 45, which the companies hope not to be there, you just pay that money back or refinance, but it is free money. It is a free financial engineering gain. Investment banks like it because there is some business for them. The fees are likely paid by the buyer of the bonds. So not something stellar, not something that will hugely increase the value. Maybe we'll just push the stock price higher now, because companies do things like that when they think the business or the stock is undervalued. So 3% buyback. Okay, if they have to issue back the stocks, keep in mind they have to issue back the stocks 5 years from now. 5 years at a 5% interest rate, that's already 200 something million. 30% of 1.7 billion, that's again a 400 million gain. So we have about $700 million pure gain for JD shareholders. That is not bad on the market cap. So what is it? 1 point something percent of value creation no matter what happens. Of course, it is financial engineering, but okay, if they want to play these games, maybe you say, okay, you get some coverage from investment banks, additional things. So those might be the things. And then also, if JD did it, why not consider to do something like that? Alibaba is rumored to raise about 5 billion if they do buybacks now and have free money for 5 years. Later, they will likely have to issue that stocks back, but they will buy, I don't know, at 80 and perhaps issue at 120. 40% gain, a billion something. So 1% maybe value creation, but 1% here, 1% there. And especially if the shares drop, does the buybacks they're already doing increase the value there? So I just wanted to explain what are convertible bonds in this case, how Tesla did them, how JD is doing. Those are at a higher price. So it's a way to financially engineer the value there, win for the company, and a very big win for the investor if the share price surpasses 45 in 5 years. So if you want to double your money, the share price needs to double, and then you have, let's say it's at 60, 70, and that's the game you are playing. That's the return, because you are getting nothing on the bond. So if there are players who want to do that, it's good for the company, does the buybacks with practically free money. That is why they are considering it. That is why Tesla did it too. And just wanted to explain what's going on with these bonds. Thanks for watching. I'll see you in the next video.